Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody, guys. Let's take a look again on the euro currency. So market has completed our expectation. As we said, yesterday we have expected some minor upward continuation just to complete the intraday ABCD pattern, and we have agreed to keep watching and trying to understand what will happen next. So as we said in the weekend, let's wait for hitting of the 1360. As soon as it will be hit, we will see the manner how it has happened, what has happened around this area, and we will make the assumption on further action. So whether the market indeed will continue to move higher, or it will be just minor bounce, and the market will establish downward action, something of that sort. So currently, guys, in the price action that we see here, definitely we do not see some real strength. So this is normal pullback reaction on the ABCD OP target, the reaction on the Gardner's triple 2 buy pattern. So it's normal pullback on the 30% retracement. This minimal target is completed, but I do not see any power in the euro currency. So in general, I know that not everybody read our weekly reports, and many our farmers watch just daily videos because it's provide the real-time technical analysis. But in a weekly reports, guys, we're talking about very important things and fundamental things. So in the background on the long term on the euro currency. And for example, in the last report in this weekend, we had talked about the long-term perspective of the euro. And just in 2 words speaking, because it's really a very big subject, very big topic for discussion, but in 2 words, personally, I do not believe in a real bull trend on the euro currency anytime soon. Because if you're watching for in tracking and keep an eye on the recent events in the relation between the United States and the European Union, you could see that they are becoming not really very friendly as they were previously. So there are a lot of arguing currently in the discussion of different topics. For example, Europe is not satisfied with the United States sanctions against the Iran because it stopped the development of the European Union industrial production, and they can't come to agreement on the gas pipe Nord Stream 2. This is just 2 subjects that stands on the surface, and this in general, this is some. As I see it, this is some kind of the tendencies that is starting slowly, but currently Europe starts to protect their own economic interest more aggressively than it was previously. And this spiking doesn't bring to Europe something really, nothing good really, because the United States has the tools of the control. Because the big part of business of the European companies stands in the United States, and this stuff hardly will support the euro in a long-term perspective. That's why, from that standpoint, it's very difficult to suggest that on the euro currency we will see some real big bullish reversal and upward continuation. So the United States will keep the hand on the European Union economy as long as it will be possible, and it definitely has the tools to control it. So from that standpoint, in the longer term perspective, the chances on reestablishing on some bearish trend on the euro currency looks more preferable, at least as I see it. In the shorter term, now let's turn back to a discussion of the technical situation right now. So currently, guys, what we have is minor reaction, as we said here. On the intraday charts, we have completion of the ABCD OP. Mostly target has been hit, just few pips, market hasn't quite reached it. So we stand at the PN agreement. If this action would be a bit more gradual, more smoother, here I would say that we have Gardner's triple to sell, because we have thrust down, ABC retracement up, and we should get some downside action. As reaction on the OP hitting, we have bearish engulfing pattern. It suggests at least a kind of the ABCD action on intraday charts. So that's why today we will be watching for deeper retracement. So yesterday, indeed, market has shown just minor retracement, right to the 30% support. It was not the butterfly, unfortunately, because market taken out of these lows, but still, it was able to hold above this area, and it completed our trading plan to take the position long, either here with the stops below the confluence, with the target at the completion of the OP. Well, we would say that, well, let's say that it has been completed, just a few pips here. So now we're watching, you definitely could see it here as kind of the hand shoulder shape. It's ABCD action. Now we're ignoring this support because it already has been tested. Market wasn't able to reestablish upward action right from here. It means that it will go deeper, either here to this area. So now we're watching for OP or even XOP. In OP we will get the agreement with the confidence support 1311, 1318. Next area will be XOP support in 1285, 1289. This will be next area. Well, that's what we'll be watching for today action. So I would suggest that chances to hit the XOP currently looks very significant, because if we will get this kind of actions very fast and strong, downside acceleration, that will support the idea of moving to the XOP. And to be honest, guys, I will not be surprised if we will see even reestablishing downward action or retesting on 112 lows. But that's a bit early to talk about it. We need to see first the taking out of these lows to speak about it. Currently, let's treat it right now just as a retracement of this upward action, reaction on the OP, dealing with the engulfing pattern, hand and shoulders, and watching for two targets. This is the first one, that is the second.